This is an opportunity to utilize the strengths of the market as well as the strengths of traditional safe money vehicles to develop an optimal, a really beautiful portfolio that holds you steady during times of difficulty in the market, but still gives you great opportunity during times of growth. Hi, friends. This is Colin Richards, and we're continuing a discussion today here on the Lord and Richard Show about the changing tide over the last couple of years that is really rewarding people who are looking to safe alternatives to market volatility. You and I both know one of the great challenges of retirement is that when you're ready to retire, you've been building, you've been accumulating. Now you're ready to use the money. But so often I see people gripped by the fear of actually tapping into their retirement accounts to the fullest extent they can because they're concerned that things like market volatility or maybe withdrawing the money too fast at too high a rate are going to jeopardize their future. So many people live below their ideal retirement standard, that level of income that you could be taking to max out your current income opportunity or when you retire and not worry. Right? And that's very hard to do out of a traditional portfolio of stocks and bonds because market volatility is an unknown factor. And as much as you might try to predict it, it can take years off of a typical retirement. Study after study after study shows that if you're withdrawing during down markets from a stock or bond portfolio, you greatly decrease your likelihood of success. You say, well, what am I supposed to do, Colin? Pack up and move to an efficiency apartment and reduce my expenses and not withdraw so much whenever the market's volatile? No, that's not the answer. Now, some people have carved out some cash, right? And they say, well, I'll have enough to sustain me through a volatile market. Can you sustain yourself for 3 years? Because that's how long some ultra bear markets last, like back in 2000, back in 2008. And we're overdue for another ultra bear. And what is that going to do to you? You say, well, Colin, that's nothing but frustrating. Give me some hope, right? Well, here's the cool part. The current economic climate, however you feel about it, actually represents a huge opportunity for people who want to deploy their assets in a way that will grow, but not be subjected to undue risk, and yet still be able to rely on their money for income that will last throughout their entire lifetime. Part of the unique situation we're in is interest rates are very high relative to recent historicals, right? We've seen these periods in the distant past, like around the late 70s, early 80s, but when have we seen opportunities like today? And I know it doesn't sound too exciting when I talk about rates, being around 4 and 5% for savers, but recognize that's as much as 20 times the return that you could have gotten just a few years ago. You say, well, Colin, will 4 and 5% do it? I can't really do that on my whole portfolio. No. I'm not encouraging you to put all your money into a money market or a CD or a traditional savings account or even a fixed annuity or cash value life policies, all the safe places you can put your money and grow by a guaranteed interest rate. Those are helpful, but I've got a better approach. Because with the low yields of the past behind us and those safe money tools yielding respectable rates of 4% or more, you have a huge opportunity to actually leverage those yields and get even better returns. Decades ago, banks were the first to come up with this idea. I remember I have an article of Chase Manhattan coming up with a really cool idea on a CD. A good old-fashioned certificate of deposit, or what some people might call a certificate of disappointment in recent years. But back in those days, there was enough interest that you could keep the principal safe and then invest just the interest or yield coming out of those safe tools in highly leveraged financial instruments. You say, wait a minute, Colin, put the brakes on. So you're saying I got to leverage my money? I mean, that sounds like risk. Yes, but listen to what I'm saying. I'm saying I only want you to risk the interest on your safe money. Think of the fable of the goose that lays the golden egg, right? Remember that fable? The goose, if you happen to have one of those and it spit out a golden egg once a year, how interested would you be in preserving that goose? Well, you'd be real interested in it, right? You'd put it down in a safe place in your basement or wherever. But you could afford to risk just the golden egg because that's a renewable resource. It comes back to you year after year. Whereas if you lose your goose is cooked. Well, that's how we should look at the principle on a portion of your retirement accounts. At Lord & Richards, we use another tool that I think I can illustrate best with a barbell, like weightlifters use. And they got a weight on one side and the weight on the other, and it has to balance out. Well, at Lord & Richards, we balance your portfolio by taking a portion of that barbell, one weight on one side, and putting it in a principal protected place, and the other, which has risk, has the opportunity to grow at a more aggressive rate. So on the one side, principal protected, on the other, more aggressive growth. You say, Colin, I don't want my money half into vehicles that aren't really going to grow that much. Well, here's the cool part. On the safe protected part, let's use the market on the other side, right? And we're going to have a more aggressive stock-oriented portfolio. We're going to rely less on bonds for safety and more on stocks for growth on that side. Because over here on the right, as a substitute to your bond portfolio, we're going to use safe principal protected tools. That's something bonds can't do for you. They don't protect principal unless they're government bonds. And so we're going to actually use safe principal protected tools, but we're going to take that low guaranteed interest of 3, 4, 5%, depending on the length of time we're invested, and we're going to leverage that. Okay, we're going to take just the golden egg from your goose that gets laid each year, and we're going to leverage that and try to turn that 3, 4, 5% into 6, 8, 10%. Now that starts to be much more interesting, doesn't it? And so we still have opportunity on both sides of your barbell, the so-called safe side and the so-called at-risk side. Yes, our stock-oriented portfolio is going to be more aggressive. You're going to have to be comfortable with the idea that half, let's say, of your portfolio, it doesn't have to be half. It'll be scientifically figured out how much you should have there. But that portion of your portfolio, that side of the barbell, is going to go up and down with the markets, as they always do. And we'll be prepared for that. But what we're going to do is your lifestyle, your retirement, is going to be attached over here on the safe and growing side. The safe and growing side. So you can have safety and growth on the same dollar at the same time, taking advantage of today's higher interest rates to get higher levels of growth on safe money than we've seen in a generation. This is an opportunity to utilize the strengths of the market as well as the strengths of traditional safe money vehicles to develop an optimal, a really beautiful portfolio that holds you steady during times of difficulty in the market, but still gives you great opportunity during times of growth. Well, I'm going to talk about this more in our very next segment, but in the meantime, I'd like to continue this conversation with you. Together with my team, we're seeing people every single day and have helped thousands of people to develop a plan for retirement freedom. Your opportunity to be truly free in retirement, carefree, and not worried about your wealth. Wealth is foundational to the things that really matter in your life, like your health, your happiness, your relationships. And we want to help you by removing the obstacles to the freedom and the joy that you could be experiencing right now. It simply starts with a phone call.